Hi everyone, Bag of Dawn, Stock Market Caddy, April 17th at about 2:30 in the afternoon, Thursday. And happy Easter to everyone. A little bored today, not a whole lot going on, probably not a whole lot going on into the close. So we thought we'd just go ahead and as we offer maybe a bit of a perspective as to where we are, how we approach our systems trading. And this is an hourly view of the markets, and I'm going to bump this over to we have 60, 240 daily, weekly, and monthly for all of the major markets, everything, corn, lumber, you name it. But most people are interested in the volatility indexes and the indices, and as we are too. So let me just explain. This may be a repeat for some new folks. And if you're new to us, just give us a week or two. Try to watch and stay with some of the videos. It's second nature to us because we've been doing it so long and we developed it ourselves. This platform that you're looking at is from TradeStation. However, all of the software that's written in English and the coding and the logic and all of that is proprietary to us. Tens of thousands of hours, folks, of trading our own money. So last week, if you go back and watch our video, I think it was April 11th, it was last Friday, whatever date that was, we were mentioning how all the markets were most definitely in a red zone and were selling off, but we were concerned with this, that the volatility index was not confirming. We needed the daily to be long. The hourlies were long, but the daily wasn't. And it never did get long. All week it didn't, and it just stayed flat. And that was the problem. It wasn't confirming the short move. So it gave us, and I think we even said last week, you shouldn't be initiating a short position last Friday if you weren't already short. Because what we do, folks, is we'll come into a position on an hourly basis, try to stay with the position, and then the only time we will go overnight in a short position if the daily is in a short. So the daily on the ES is still short. The TF is still short. The Qs is still short, and the YM is still short. Now the problem or the challenge that individuals have is you have all this money, you're staying overnight short, and you're seeing it erode as the market counters. And the question is it a counter trend or is it the start, is it a continuation of the bull trend? And that's where you wind up trading too much and get all caught up with some anxiety and the angst, and then mix in some of the noise from CNBC, and after a while you don't know whether you're coming or going. How we play it, and this, if you go back and look and listen to the video that we played on Friday of last week, compare it to this week's. What we did was, yes, we were short on the daily as of last week. We are still short the dailies on this market. But what we do differently is now we consider this the daily trend. When the hourly went long, we went long. And we are still long. How do we go long and short at the same time? We have multiple accounts. We have two accounts. And so we're in essence trading against ourselves, and it's hedging and wedging. So it's our expectation, it is our expectation that one of two things is going to happen. Either today or next week, the hourlies will go from a long to a flat and resume itself short. And what will we do? We will kill our long position. Will we add to our short? Not likely. We'll just let this short ride. So in essence, we've protected our profits. If, on the other hand, next week, so we trade against this position. If next week the daily does something more, breaks out into her own, it's no longer, this is just not a counter, but the daily goes long on our strategy, then what will we do? We will then kill our short, and then we will ride and stay long on the overnight position and trade against that position if these go. So we're always hedging and wedging primarily the hours the hourly against the daily, and we just don't get lopsided. We don't get too many contracts on one side of the market. So we're constantly doing that. And we use the weather report and the slope ratings and the wind direction and the fairway width and then all these individual clubs to help us determine where we are on the field. That's what we do. So what are we seeing right now, folks? All this is to us right now is a counter trend move on the hourly. I don't know when it ends, but we're still short on the daily and long on an hourly. If the hourly give it up, today, maybe not likely, but if it does, we will kill it and then stay short. Our guess, from what we're seeing here, without getting into too much detail, our subscribers get a lot more detail, is that come Monday, Tuesday, we will resume down. Alrighty? And we try to provide our subscribers some ideas, how to as well. Once you have the direction and you understand, trading multiple accounts, how you can use options to hedge yourself and protect. Quite frankly, if you wanted to get short and you hadn't been short, this is actually a good time. You could come in, get short on the S&P. You could sell a put for next Friday, some distance out of the money, or buy a protective call for a few weeks, manage your risk, define your risk, that sort of thing. We're big fans of all of that if you don't have this very tool on your desktop. We do have folks that have gone through our caddy school and have been taught how to use this. It takes about a week that we teach, and then if you're on TradeStation, you can have this very same thing. Pick the time frames you want. You want to trade smaller, quicker, you can do that too. You want to trade other markets, you trade whatever you want. Good luck, folks. Have a great Easter, and just thought I'd offer that up. And go back and listen to what we had to say on April 11th and compare it to this week. And maybe you'll begin to get an appreciation for what we're doing. It beats listening for 25 years to the Contrarian News Bubble channel. Holy smokes. Good luck.